Good morning friends, I am Parsuram Shukla, Training Associates Economics, KVS JIT Bhubaneswar. Welcome to my economics class. Today I am with you all with my 10th video lessons of Unit-1 of Class-12 Macro Economics. In this unit of national income and related aggregates, I have already discussed 9 video lessons. If you have missed my video lessons, the links to all the video lessons are given in the description box given below. So today I will be discussing chapter 10, exam oriented questions. So the content to be discussed in this video lesson, few exam oriented questions on the topic Unit 1 national income and related aggregates. So the learning objective, at the end of this video lesson, you will be able to provide answer to the questions discussed and related questions also. So I have prepared some worksheets, 3 worksheets I have prepared covering some of the concepts of national income and related aggregates. So let us begin with worksheet number 1. Classify the following as factory income or transfer income. So just see the options. Unemployment allowance. So this should be transfer income. Okay, just for example I have cited, but you can check yourself, your knowledge. Salary received by Rakesh from a company. I am not reading, rather you go through the options. Okay. So let us check the question number 1. What are the factory incomes and what are the transfer income? Okay. So factory income 2, 4 and 7. 2 is salary received by Rakesh from a company. Compensation received from the employer. And 7 bonus received on Diwali. So these are the factory incomes. So obviously transfer income, unemployment allowance, financial help to earthquake victims, then claims received from insurance company by an injured worker, birthday gift received from a friend. So these are the transfer income. So you know transfer income for which the income you receive but you have not to contribute anything in return. That is transfer income. So that is unilateral payment we have already discussed. Whereas factory income is earned income. Then question number 2, classify the following as final goods or intermediate goods. So you go through the options. I am not reading. So let us start with question number 2, that is final goods 1, 3, 6, 8. Let us do in this way 1, 3, 6 and 8. 1 is machine purchased by a farm, so that is final good. 3 clothes purchased by an individual, that is final good. Then you see here, once again you cross check 1, 3, 6, 8, 12, 14 and 15. 6. What is 6? Book purchased by a student. That is final good. Then 8. What is 8? Postage stamps purchased by a consumer. Then 12. Kitchen gardening. Seeds purchased for kitchen gardening, that is final goods. Then 14, then 15. 15 is also final good. Sewing machine purchased by a housewife, that is final good. So like that, if you remember what are the intermediate goods, you can point out. Means which are the intermediate goods here? Soft drinks purchased by the school canteen, then forage, coal purchased by a factory, then electricity consumption in a business, then books purchased by a bookseller, okay. Then postage stamps purchased by a business unit. Then exhaust fans used for making water coolers. Seeds purchased by a farmer to produce wheat. Then machines purchased by a dealer of machines. So these are the intermediate goods. And already I have discussed which are the items which are included in final goods. Then true or false. You can see here, are the following statements true or false? Give reasons. You see question number 3. The answer you can check directly from here. Which one the statement was? Intermediate goods have a derived demand while final goods have direct demand. So you see, intermediate goods have a derived demand, that is this statement is true as their demand depends on demand for final goods. On the other hand, final goods have a direct demand as they satisfy the wants directly. Then question number 2, that is statement 2, bread is always a consumer good, so this may not be false. That is, it's not true. It depends on the use of bread. When it is purchased by a household, it is yes, it is a consumer good. If it is purchased by a restaurant, it is a producer or intermediate good. So bread is always a consumer good. That is not true. It may be consumer good or it may be the producer good or intermediate good depending upon its use. Then third statement, gross investment can be equal to net investment. Gross investment can be equal to, yes, it is possible when depreciation is 0. Then question number 4, market price is always more than factor cost. What is 4? Yes, market price is always more than factor cost. So that is false. Market price can be less than factor cost if net indirect tax, that is NIT, are negative. Market price can also be equal to factor cost if the net indirect taxes, that is NIT, is 0. So question number 4 was market price is always more than factor cost. That is not correct. So that is false. The reason we have cited here. Then 5, a good can be intermediary good in one case and a final good in another case. It is true. A good can be an intermediate good as well as a final good depending upon its nature of use. For example, a car purchased by a household is a final good, whereas it will be an intermediate good if it is purchased by a car dealer. Then number 6, the concept of normal resident applies to individuals only. So it is not correct. That is false. The concept applies to institutions also in addition to individuals. That means, you see, the normal residence applies to individuals only. It is not correct. Normal residence applies to individuals as well as the institutions. Number 7, in final goods, no value is to be added. So number 7, true, because final goods have crossed the production boundary. So this was about the worksheet number 1. Then go to the worksheet number 2. So you have to go through the questions first. Just go through at a glance. Mention the situation in which following equations will hold true. You see, national income is equal to domestic income. In which situation it is true? GDP at factor cost, gross domestic product at factor cost, is greater than gross domestic product at market price. NNP at factor cost is less than NDP at factor cost. GDP at factor cost is equal to GDP at market price. So let us go through this answer to this question number 1. Answer, when net factory income from abroad is 0, you see, national income is equal to domestic income when the net factory income from abroad is 0. Okay, because you know that NDP at factor cost is known as domestic income. So NDP at factor cost plus NFIA is equal to net national product at factor cost, that is national income. So if NFIA is 0, nothing to be added to domestic income. So in that case, NNP at factor cost will be equal to NDP at factor cost. So GDP at factor cost is greater than GDP at market price. In which situation? So you see, when subsidies are more than indirect taxes. When subsidies are more than indirect taxes, at that time GDP at factor cost will be greater than GDP at market price. NNP at factor cost is less than NDP at factor cost. So number 3, when factory income paid abroad is more than factory income received from abroad, at that time what will happen? NNP at factor cost will be less than NDP at factor cost. That is, national income will be less than the domestic income. Then GDP at factor cost is equal to GDP at market price when net indirect taxes is 0. You know that GDP at factor cost plus net indirect tax is equal to GDP at market price. So if a net indirect tax is 0, then nothing will be added to GDP at factor cost. Then in that case GDP at factor cost will be equal to GDP at market price. Are the following statements true or false? Give reasons. You just go through these statements. Okay. So the first one you check true. It happens, which one? In a closed economy, GDP is always equal to GNP. Why? In a closed economy this is true because there is no question of net factory income from abroad because the economy is not related to other economies of the world. This is the answer. You see, it happens because net factory income from abroad is 0 due to no interaction with the rest of the world. Then number 2, domestic income of a country can be more than its national income. Domestic income can be more than its national income. True. It is possible when the factory income paid abroad is more than the factory income received from abroad. Then the third statement, domestic product includes contribution of only resident producers within the domestic territory of the country. Then you see, it is false. Domestic product includes contribution of all the producers, whether resident or non-resident, who are within the domestic territory of the country. So this is a very important question. Then question number 3, very short answer type question. You have to give the answer in one sentence. Define domestic income. So let us check the answer. Domestic income, that is NDP at factor cost, is the net money value of all the final goods and services produced within the domestic territory of a country during a period of 1 year. Then number 2, when the net domestic product at market price is less than the net domestic product at factor cost. When NDP at market price is less than the NDP at factor cost. Number 2, you see, when net indirect taxes are negative, that is, subsidies are more than the indirect taxes. So in that case, it will happen that NDP at market price will be less than NDP at factor cost. Then number 3, why is gross domestic product at factor cost more than the net domestic product at factor cost? So you see, gross domestic product at factor cost includes depreciation, while net domestic product at factor cost does not include depreciation. So gross value includes depreciation and net value does not include depreciation. That is why the gross will be more than the net value. Then number 4, when will GDP of an economy be equal to GNP? GDP will be equal to GNP. GDP and GNP will be equal when the net factory income from abroad is 0. Already we have clarified that. When will the domestic income exceeds the national income? Domestic income will be greater than national income. When it will happen? When the net factory income from abroad is negative. Then number 6, if NDP at factor cost is 1000 crore and NFIA is minus 5 crore, how much will be the national income? That is NNP at factor cost. So NNP at factor cost, you know, NNP at factor cost, that is national income, is equal to NDP at factor cost plus that is net factor income from abroad. So here NDP at factor cost is 1000 plus NFIA value is minus 5. So 1000 minus 5 is 995 crores. So this is what question number 6. Then question number 7, if the domestic factory income is rupees 200 crore and the national income is rupees 190 crore, how much will be the net factory income from abroad? So domestic factory income is 200 crore and national income is 190 crore. So you see, number 7, net factory income from abroad, that is you see the national income is 190 is given here, I think, yes. National income is 190 minus the domestic income is 200, because you know this domestic income plus net factory income from abroad is the national income, or difference between the national income and domestic income is the net factory income from abroad. So national income value is given and domestic income value is given. So 190 minus 200, that is minus 10 is net factory income from abroad. So you can check here whether it is written correctly. Yes, minus 10 crore. Then number 8, in which type of economy domestic income will be equal to national income? In which type of economy? You see, and in the closed economy, because in a closed economy, the domestic income will always be equal to national income, because that economy is not having any connection with the rest of the world. How would you know whether a particular expenditure is an expenditure on intermediate good or final good? So, very interesting question. So, final consumption expenditure and final investment expenditure. Any other expenditure other than C and I, that is final consumption expenditure and final investment expenditure, is to be treated as an expenditure on intermediate goods. So, expenditure on final consumption and expenditure on final investment are final expenditure. So, other expenditure are treated as intermediate expenditure because of course that is on the intermediate goods. Then number 10, what is current replacement cost? It refers to the estimated value of depreciation of fixed capital assets during an accounting year. Then number 11, what is depreciation reserve fund? This is a very important question. Depreciation reserve fund refers to the provisions of funds to be used for the replacement of worn out machines. Number 12, what is the impact of indirect taxes and subsidies on prices? You know that what is the impact of indirect taxes and subsidies? Indirect taxes raise the market prices of goods and services, whereas subsidies lessen the market prices, already discussed in the previous video lessons. Why the factor cost does not include indirect taxes? Number 13. Because indirect taxes go to the government and not to the factory imports. That is very important. Indirect taxes go to the government. It doesn't go to the factory import. Why the term depreciation is not related to consumer durables? Because consumer goods are not used in the process of production, because they are used for consumption. They are treated as consumed the moment they are purchased by their consumers. Depreciation. Which phase in the circular flow leads to spending of income? Number 15. That is disposition phase. That is the expenditure phase, disposition phase. Then number 16. What does the circular flow model show? What does the circular flow model show? Circular flow model show that production is equal to income and it is also equal to expenditure. Production equals income equals expenditure. 16. Already discussed. What are the economic agents in an economy? Name them. By economic agents or units, we mean those individuals or institutions which take economic decisions. So they are taken by farms, households and governments. And these three are the major economic agents in an economy. Then number 18, what are the types of circular flows? What are the types of circular flows? Real flow and money flow. Then number 19, what is meant by inventory? There is again a very important question. Inventory is the stock of unsold finished goods, semi-finished goods and raw materials which a farm carries from one year to the next year. Then number 20, what is production boundary? So the boundary within which production takes place, or here we can say production boundary is the line around production sector within which production takes place. So this is about worksheet number 2. Let us see this worksheet. So some are questions related to national income and some questions will be related to domestic income. So items included or excluded in national income. The first statement here is construction of a new house. Yes, it will be included in the national income as it is a part of capital formation and leads to production of goods and services in the economy. Increase in the prices of stocks lying with a trader. So it will not be included. No, it will not be included in the national income as it does not amount to any flow of goods because it is lying within the trader. Okay. Rent-free house given to an employee by an employer. Yes, it is included in the national income by income method since it is a wage is in kind paid to the employees. Food purchased by a foreign tourist at a hotel in New Delhi. Yes, purchases by foreign tourists are exports and therefore they are included in the national income through the expenditure method. Profits of Reliance Industries from its chemical business in Australia. Yes, it will be included in the national income as it is a part of the factory income from abroad. Salaries received by Indian residents working in Russian embassy in India. Yes, it will be included in the national income as it is part of factory income from abroad. Firm incurred expenditure on medical treatment of employees' family. Yes, it is a part of the compensation of employees and therefore it will be included in the national income. Direct purchase made abroad by government. Yes, it will be included in the national income as it is a part of the government final consumption expenditure. Expenditure on the purchase of shares of a new company. No, it will not be included in the national income as it is a financial claim and does not contribute to any productive activity. Expenditure on maintenance of building. No, it will not be included in the national income because it is a part of intermediate consumption expenditure. Then some questions related to the domestic income. Treatment of different items in domestic income. So the first item here is profits earned by branches of foreign bank in India. Yes, it will be included in the domestic factory income as profits are earned within the domestic territory of India. Then profits earned by a resident of India from his company in Singapore. No, it will not be included in the domestic factory income as the company is located outside the domestic territory of India. Compensation of employees to the residents of Japan working in Indian embassy in Japan. Yes, it will be included in the domestic factory income as the Indian embassy is a part of the domestic territory of India. Profits earned by Indian employees working in Pakistan embassy in India. No, it will not be included in the domestic factory income as the Pakistan embassy is not a part of domestic territory of India. Scholarships given by the government of India. No, it is not included in the domestic factory income as it is a transfer income because there is no contribution from the person who is receiving scholarship, that is a unilateral payment. Then financial sales and purchase of shares, bonds and debentures. No, it is not included in the domestic factory income as it does not contribute to the production of goods and services. Compensation of employees paid by a foreign company located in India. Yes, compensation paid will be included in the domestic factory income as foreign company is located within the domestic territory of India. Compensation of employees paid by American embassy in India to resident Indians. No, it will not be included in the domestic factory income as American embassy is not a part of domestic territory of India. Earnings of American Express Bank's branch located in Chennai. Yes, it will be included in the domestic factory income as the bank's branch is located within the domestic territory of India. An Indian-owned aeroplane operating between Singapore and Dubai. Yes, it will be included in the domestic factory income as it is a part of the domestic territory of India. So this concludes some of the items about the domestic income, and earlier we have discussed the national income, some of the items. So this concludes the worksheet 1, 2, 3. See you all in my next video on the next unit, that is money and banking. So please give your feedback to my mail ID parsuram.shukla@gmail.com. My WhatsApp number 99386494454. I hope you are benefited by these educational videos. So kindly like, share and subscribe so that next videos reach you immediately. Here I would like to point out that with these 10 videos, I concluded the Unit 1 of National Income and Related Aggregates, that is Unit 1 of Introductory Macro Economics, Class 12 Economics. So next unit will be Money and Banking. Thank you all for watching my video. Thank you.